Hey guys, we are back for another happy hour. I'm fresh off the cruise ship, and David, you're fresh from 280.
Fresh off of 280.
That's Highway 280.
You know, last week was kind of a bummer because I got really jealous of the background that
incredible.
You had there.
It was beautiful.
Yeah.
I mean, I was coming from
With
Grand.
the grass on the ship.
We were in Grand Cayman on grass on a boat with cocktails.
You can't beat that. Today we've got the Abita.
Creole Cream Ale.
Creole Cream Ale.
Yep.
And
Cheers.
Shout out to
Happy
my
hour.
My
There
buddy,
you go.
Fava. Trey Fava. If he's not available, call me.
That's funny. Hey, Mark Wood, how are you?
280.
Let's see.
All
here.
right,
Let me
turn
this
that down there, man. I tell you, Big Dave Masters Week, right?
Yeah, Masters Week.
That's where everybody is, I think.
I tell you, everybody's watching the Masters. It's exciting. It's a great term. I love hearing them talk about the greens. I love hearing them talk about the landscape, the azaleas, and the pine needles.
It's amazing. I mean, if you've never been,
it's just beautiful.
And your cheap self probably likes $1.50 pimento cheese sandwiches too, right?
Yeah, never had, and I don't do much pimento cheese, but that's okay. But I tell you, professional golf. Talk about a tough job, right?
Oh, terrible.
Tough job.
Oh, yeah.
mean, golf in general is a tough game. Certainly for me to play, for most people to play.
They call it a good walk spoiled.
Yeah, a good walk spoiled. Man, it's just really hard. Now that's a tough job. Now I know, in our jobs we get frustrated.
Oh, absolutely.
Right.
Sometimes.
It gets tough sometimes. Everybody's
Absolutely.
job gets tough. We might lose a borrower to another mortgage company, or for you another real estate agent.
Absolutely. We all had it happen.
We've got things that happen. Maybe appraisals come in low. You got difficult people. They get upset.
Difficult lenders, difficult other things.
They don't understand the documents you're asking for. But I'll tell you.
You've been watching TV again?
I've been watching some documentaries.
I bet.
Okay.
A big documentary guy, aren't you?
So, the BBC Human Planet. Let me tell you, some of the things that these people do,
right,
just to survive, is unbelievable.
Who's they?
Different parts of the world.
Okay, so this is about
just
like
people. Now, this one story is about in Indonesia.
Yep.
These Indonesian.
Hey, by the way, I saw a ton of them on my cruise ship. But
Indonesian sulfur miners. Let me tell you, they go into this volcano. It's the Ayan volcano, and down there where the lava meets the earth.
Okay.
It forms these big chunks of sulfur. And if you've ever been around sulfur, I went to Yellowstone Park, and it smells terrible.
Oh, it smells like rear end.
These are toxic gases. Okay.
Absolutely.
That these guys are subject to. They can't even afford good eyewear or good masks to protect them. I think they said something like 74 miners have died in the last 40 years. Yeah. Just from the gas.
One a year.
They're risking almost two a year.
Two. Yeah.
They are risking their lives. All right, they're carrying 90 kilograms, which is 200 pounds. And in the documentary, it said twice their weights. These guys weigh about 100 pounds. They're carrying 200-pound loads of sulfur for 200 meters, which is about which is about 220 yards. Yeah, could you imagine getting home from work? Honey's like,
I'm worried about me smelling. Like,
yeah, when you get home from work and or you get back from the restaurant and your clothes smell like the restaurant.
Yeah, and that's every day.
These guys probably
terrible.
220 or 2 football fields, and they make $10 to $15 a day.
Yeah, it's not good. Not good.
So that's a tough job.
I'm gonna stop whining.
Yeah. Next time you're having a bad day, just
is this a science class?
It is. Yeah, Bruno. Yes.
Hey, you notice who came up with the topic? By the way, if everybody doesn't know, Georgia Tech here, right?
Yeah, Georgia Tech. I mean, loud and proud. You got to appreciate stuff like this. It's interesting. I love it.
No, it is fascinating. I mean, all that stuff. But although you got hooked on that, what was that crazy diet one you got hooked on? The documentary that was about food.
Oh, yeah.
And you were like, oh, no, man, I can't eat anything.
What the health?
What the health? And it was what the health, I think. I think it was a bunch of bunk.
Well.
Because I'm just going to bite into a steak.
Karen Barnes is in.
Karen is in.
Jason Dubendorfer is in. Good to see you, buddy.
Absolutely.
Thanks for tuning in. So today we're going to talk about a few things. We got chronic sitting, which is now a huge
all about
health
science
problem.
Today.
Health problem. We've got older HVAC systems.
Yeah, getting to be a real problem.
We're going to talk about a little bit about been watching some Clark Howard podcasts. Some
listening.
Stock market.
You haven't been watching.
Listening. The stock market and some credit cards. So
yeah. By the way, if you haven't, hey, Clark's got one of the best podcasts out there. Clark.com, best websites. He's the king of cheap.
I tell you, I think he started in Atlanta.
He did.
And in '87, he said, was his first when he started. And I was living in Atlanta back then. I still remember him.
Yeah,
then.
Had the radio show, and then now it's obviously national, and then
he's like consumer police.
He is. He does. He says save more, spend less, and avoid getting ripped off. Jessica's going walking.
Yeah. So we had some people in our office today that are going walking. So the chronic sitting. Okay, I picked up the 280 Living this week and was reading through there. Oh yeah, that's it's an Abita. It's a local beer, Creole Cream Ale.
Hey, Courtney.
Courtney, how we doing?
Yeah.
So the 280 Living, okay? I was
Yep.
perusing the newspaper.
This is a local newspaper that comes to our houses.
Yes. Your Health Today talked about sit less, live longer. Now listen to this.
I sit all day, right?
With every hour you sit, it decreases your life expectancy by 2 hours.
2 hours?
Yeah.
So I'm not going to live long then.
So the point of this is to not sit out all day.
Upstairs.
It's really hard if you've got a job that requires you to sit down. I know they've got a lot of the new Veridesks.
Stand desks.
Yeah,
absolutely.
That you can sit or
and
stand.
they're getting a lot cheaper. I mean, they used to be thousands of dollars.
They had one study found 6 hours of uninterrupted sitting effectively counteracted the positive health benefits of a whole hour of exercise.
That's crazy.
So if you work out for 1 hour in the morning,
that can't be true.
Go to your job and sit down for 6 hours. You basically offset each other.
Do you think that's true? I don't think that can be true.
Now Michael Bruno knows exactly where to get one of these beers.
Trisha Ham.
I picked
the pride
it up
of
locally
Nashville
here.
or Franklin. Good to see you.
But basically, another study found the women who sat the longest daily were found to be 8 years older biologically.
Who was?
Women. Ladies. So ladies, you got to get up.
Get up, get moving.
Get up. It decreases the blood
Dance
flow.
like me.
The key is to avoid sitting for more than 50 minutes out of each day.
Key is to avoid sitting
50 minutes, more than 50 minutes.
So I can only sit for 10 minutes?
No, get up 5 or 10 minutes every hour and move around.
Gotcha.
Get up 5 or 10
Right,
minutes every hour.
Cody Clemens. Yes.
Cody Clemens.
Hey, Mr. Entrepreneur is on the blower.
That's it.
Yeah.
So man, we got to get up and walk. Got to get the Veridesks. Got to get moving.
Yeah, I mean, I don't know why I think some of this is bunk. Oh, now getting sitting's bad, but this 50 minutes. So I got to get up at least for 10 minutes. I want to make sure. Yeah, I got you there.
Well, look, if they don't come up with something for us to change and do every so often, then we'll
I mean, somebody's got to come up and tell me you're dead, right? Yeah. I mean, pizza's bad, everything's bad.
Yeah, Coca-Cola's terrible for you.
I mean, although I'll tell you what, I do feel more productive when I'm standing up and talking to people because for some reason you feel.
You know, I had a buddy of mine, Mark Britton, posted on Facebook. He said, have you ever thought that maybe it's just oxygen that's killing us? It just takes a long time? Well, I kind of like that.
Oxygen.
Every time I've told Courtney that, she doesn't listen, but she doesn't like it.
What? Say that again. About oxygen? You're
no,
just sucking the air from the room?
No, that's part of it.
She probably thinks you're sucking it. Hey, can you just leave?
Yeah.
I got to go to bed because she goes to bed at what? 6 p.m.?
Yeah, a little after our dinner at 4:30.
Yeah. She's up at 3 doing her walk.
Yeah.
All right.
Man, what's next?
I tell you what, it's getting a little old. These agents and people thinking that these older HVAC systems, AC units, are obsolete.
That's heating, ventilation, and
air conditioning. Absolutely.
Yes.
What's happening is,
hey, Lori Sue,
as everybody knows, in about 2012, I think it was, they changed the SEER rating on all these and using a new R22 gas, Freon gas, and all the new systems have.
Don't use too many big terms.
Yeah. I don't know what I'm talking about.
Okay,
right?
good.
Yeah, I mean it's unique. And what's happening though is that by 2020, every new thing is going to have to. We're only going to be able to use basically recycled Freon essentially, and then by 2030, it's got all this old stuff is going to be out of the picture. All these old units are going to have to be out of the picture.
Okay.
Which is typical lifespan. I mean, that's so long from now. But what's happening, though, is we're finding we come inspection time and everything else. Of course, the entrepreneurs out there have created adapters that allow, let's say, an interior unit that is the blower to make sure that the same gas that's following the old system can still work with the new one. And what's happening is these guys are coming in saying, they're mismatched systems, and you're just going to have to replace the entire system because it's not a new system. And then the response is, hey, it works fine. It's blowing cold air. It works. And just because it's not new doesn't mean it's not going to work, right?
Yeah.
And so we're seeing a lot of deals falling through because of this. And it's, as Donald Trump may say, it's fake news.
Fake news.
And agents, some of these people are just listening to anything they can. Listen, a good home warranty company will cover it. Now, I'm just telling you, there's some home warranty companies that say are good, some that are bad, right? On here, we're not going to take an opinion as to, well, we will.
And I will tell you now, I've had some experience with home warranty companies that will Band-Aid the heck out of that thing.
They will.
Until it completely explodes.
It will, and then they'll replace it, right? And so what's happening, though, these people are blowing up legitimate deals because, and you're getting a lot of, even I saw in one of the big newspapers as I was traveling, something about this. I mean, the fact is, it is a big shift into the type of gas that's used, and the systems are more efficient. Of course, but let me ask you a question. I have one unit at my house that is probably 5 years old that doesn't run as good as the one that's 20 years old. Right?
That's
crazy. But maybe they made it better.
That could happen every now and then, right?
It could, but I'm telling you, make sure you get all the right information on this, and you're not killing deals without making sure that, like, I can tell you this, Home Warranty of America, which is one of the warranty companies, they will cover it. I know they will. They'll cover a new unit. If you have to, you may have to pay a little bit more, but they're covering all these things, whether we call mismatched system, because you shouldn't have to. If your interior unit goes out, your blower goes out, you shouldn't have to replace the outside unit that's perfectly good.
Yeah.
I mean, that would be foolish financially.
It's just extra money to spend, right?
Yeah, why would you do it? Dave Tyson, what's happening, man? Good to see you. Saw you yesterday.
Bradley Abney said, hey, man.
Yeah. Hey, Brad Abney, great American. Mr. Hueytown. He was a big Hueytown baseball player. Good one, too.
Awesome.
So anyway, moving on from that, I mean, I tell you, just don't be stupid. I mean, that's the moral of this story.
Yeah, just get all the information you can about those HVAC systems, and the home warranties always advised, right?
Yeah, I mean, here's the thing, especially for sellers. I mean, because it gives peace of mind for the first year. And just remember, these home warranty companies, they're called home warranty insurance companies. They're insurance companies. So the idea that they're just going to unload their wallet to you is counterintuitive.
Yeah, you can't call them for every little thing, and they're going to just bring out.
Oh, absolutely.
Going to back the truck up with brand new appliances and
there's some, quite frankly, that won't pay. They'll deny out of hand, all that. I'm not going to mention names, but
they'll keep band-aiding problems until they get out of hand.
Absolutely.
But hey, as long as it works, right? It's worth the $50.
Yeah, I mean, whether you renew it is
the service call, right?
But yeah, absolutely. I mean, I like it. Unless you're like Mark Carlisle, I'm a business partner. You know, he keeps them going. I mean, he basically has them almost fire him because he finds a need for everything.
Oh yeah,
you know, it reverses on them, right?
That's economical, right?
Absolutely. Well, let's move on.
Man, listen, Clark Howard. We spoke mentioned him earlier.
Yeah,
guy started in Atlanta. Big consumer advocate for just getting information in the marketplace about all kinds of things. And one of the podcasts I listened to yesterday just had a lot of great information about the stock market that I thought was interesting. You know, he talked about how the stock market's been on such a yo-yo lately. Okay, just in the last 5 to 10 days, we have been up 700 points.
It's been a yo-yo.
Down 500 points. I can't figure out how this mirror.
Yeah, we're very mirrored.
But a lot of volatility. Okay, up 700, down 500, up 400, down 300. So this causes people to get a little bit of an anxiety.
Absolutely.
They get a little anxious about their investments, about their money. They're not sure what to do, what decisions to make.
Absolutely.
You know what he does?
What's he do?
He doesn't even look at it.
Yeah.
He checks his investments 4 times a year. Okay? he ignores the ups and downs. He checks them at the end of each quarter. He looks at what he's doing well. He looks at how he's doing not well. I mean, that's pretty amazing.
Oh, well, yeah, because I've stressed myself out a couple times in the last month.
Yeah. And you know, another big advocate of the buy and hold.
The Alabama Hammer is here.
Yes.
Mr.
Hammer
Slocum.
time.
Well, it's Alabama Hammer. You know Mike Slocum?
Yeah. Alabama Hammer. Hey, Mike, how you doing? But look, he looks at it, and Warren Buffett.
By the way, the Alabama Hammer is a big Carrie Underwood fan. I just didn't know if anybody knew that about him.
That's perfect.
Yeah.
But Warren Buffett is another advocate of the buy
Fan
and
club,
hold.
too.
Okay.
All right.
He says not to look at it. He ignores the ups and downs because it's about time. Okay. How much time do you have on these investments? He ignores the news in between. Investment news leads to making decisions based on emotions. You never should make
Jason.
big. See you, buddy. You never should make big decisions based on emotions. Okay.
Which is what we do all the time, isn't it?
So when you see these market swings, when things are going really well, you're excited, right? You want to put more money in, maybe, or you love the company you're in because it just ran up 10, 15%. When it drops down, you're like, oh my God, I made a mistake.
I've lost. And that's the thing. I often think about that. Like, I think, oh man, they took it away from me.
Yeah.
I had that money, but now it's gone.
Yeah, you know, one thing he said was, as humans, we fear loss more than we appreciate gains.
Oh yeah, I agree with that completely.
So we're more
I'd rather
scared.
break even.
Yeah. We're more scared in these times when the market pulls back. I think it was back in 2009 when it had the huge pullback and a lot of people got out.
Yeah.
Well, a lot of people got out and they were scared. They held on to their money. And then what'd they do?
They missed the run.
They waited until it came back up. That doesn't make any sense. You missed that whole gap there. They said the market on average rises 3 out of 4 years.
Yep.
Okay?
I think it does. Yeah, I agree with
Over
that.
long periods of time, stocks will beat inflation, but CDs and savings accounts won't do that for you.
Right.
So it's important to look at how much time you have and before you need the money that you have invested.
Because remember, I think what people got to remember is that those savings accounts, these ones that are paying good interest rates, and when I say good interest rates, 1.5, 2 points.
Yeah.
Right. They can't lose. Right.
Yeah,
but they can't gain a lot either. You're capped. And
right.
And he would also tell you only emergency money goes there. Everything else needs to be in play conservatively, right? I mean, or whatever your risk tolerance is.
Yeah. I mean, but for the most part, if you've got a time horizon of 10, 20 years or however long you've got, you can ride out these 700-point days, right?
Yeah.
We're talking about days, and you've got 10, 20, 15 years, 25 years, 401k accounts. I mean, there's no reason to get in there and start making crazy moves based on, a couple of days worth of action.
Well, and what I've done, I mean, granted, not at a big level like some of you guys may have, but it is buying now on the pullbacks. Don't readjust if you thought you had a solid investment and that company is a solid company with solid earnings, buy the pullback because if they really have real earnings, they're a rarity these days to some degree. Buy it and keep buying.
Yeah, big thing that Warren Buffett says is, why did you buy the company? One, because you liked it, because it makes money. So until that changes, until the scenario or until the narrative changes on the company, why would you sell it?
No need, unless you need the money.
Right. So just because the market swings doesn't mean that the company changed. Yes, Hammer. Dollar cost averaging is great when the stocks goes down and you have more cash to put in it. And that's a great thing to do on a schedule like Clark's saying. He looks at once a quarter. So that might be similar to when he puts money in. So at that time, if you schedule it, then it takes the emotion out of it.
Wouldn't you say, too, I think that the reinvestment of dividends, don't just take and pound that check you get for the dividend check and feel like you got money. Reinvest it right back into that stock.
Yeah, and there's some trading companies that will let you reinvest the dividend. They'll buy percentage of a share with the dividend instead of paying you the cash.
Yeah,
and that'll add up. They won't charge you the commissions.
Yeah. Like I told you, I mean, I'm doing it right now with a bond traded fund. It's great. It's one I've told you to get in a long time. Right? It's doing fairly well in terms of value, but basically it's paying an 8% dividend annualized monthly. So you make $18. But what you're saying is right. Is that it's taking $18. It has a $22 stock value, and I invest $18, which equals about 80% of
so you get
one share.
0.8 shares every time that pays out.
Absolutely. And so now your share growth has maybe over 5 months grows by 5 shares. I mean,
but think about 10 years though. I mean,
I didn't lose anything. That's the key. Is I grew my shares without even feeling it, because I think that's what you were talking about earlier when he's talking about we're more afraid of losing because it's an emotional thing. I think that people aren't trying to get in the market because they don't understand it. And again, we'll go back to Robinhood. I'm a huge fan of Robinhood. I'll put a link down below. But Robinhood is free.
Well, it doesn't charge any commissions.
It doesn't charge. It's not free. You don't just get any share you want. But they don't charge a commission to anybody. They're making their money on people that are trading on margin or borrowing. But it's what a great way. If you have to Brady, your son's 15 years old almost, and if he wanted to get into the market and learn without having to pay commissions, it makes it a lot easier to give him $100 and let him just in and out of stocks and not worry about it. Now, I'd hate to be y'all's tax guy having to do 900 different deals at the end of the year on the tax form, but Robinhood is just a game changer because it's free.
And I tell you, they since they've come into the market, they have lowered the commissions of these other big guys.
Absolutely.
Just to compete, just to keep the business. The funny thing that Clark was saying, he says CNBC and other financial news media have to create drama to keep eyeballs.
And pretty women, right? Have you ever seen an ugly person? Or an ugly woman? I've seen plenty of ugly men on there, but there's never an ugly woman.
Of course. But I'm telling you, but that's true on most news accounts, right? Yeah. That's true on most people, maybe people in your office, people in your life. What do they do? Are they talking about other people? Because that negativity and stuff, I don't know, people
Kelly,
like to talk about it. People like the drama.
Absolutely.
They're attratted to it. So CNBC,
what are you going to do? I just thought about this. You have CNBC rotate through your office on a big TV.
It does. So it does. He's kind of said some curse words about him, right?
Yeah, doesn't like them.
I mean, I'm going to have to filter that through the Clark filter, right?
Absolutely.
But no, I mean, you got to understand, they are trying to hit some hot buttons. They're trying to stir up emotions. They're trying to get you interested in what they're saying. They're trying to get you to like them, right? But he's wanting you to just to turn off the TV is what he's saying. And don't check your account all the time.
Well, that's hard.
I know there's people out there that do that.
Oh,
that you're looking at your investment account daily.
Guy.
The stock market goes down 700. What's the first thing you do? You pull up your account. Where's it at?
Well, yeah, folks but then again, if you know what you're doing, like Courtney, it just goes flying high, right? I mean,
of course, right?
I mean, yeah, and then
and that's one part about being diversified. Let's say, it's spreading the money out, being in good investments, so you can kind of reduce the risk. Again, how long are you investing for? Are you diversified to reduce the risk?
Well, it's not investing if you're invested for 3 months. You're invested for 4 months.
That's more of day trading,
gambling.
Nothing
wrong with that if you're in Vegas. Fine. I mean, cool.
Yeah,
but don't call yourself an investor.
Yeah, if you know what you're doing. I mean, some people can make some money quickly. They can turn money quick.
Absolutely.
But, I'm just looking at the Dow Jones Industrial Average. It's a price-weighted average of 30 significant stocks. In 1990, the value was 2,700. In 2000, it was 11,700. That's a huge jump in 10 years.
Index fund and all this. Man.
2010, it was a little bit less. So first 10 years, a huge jump. Next 10 years, flat. Today, 8 years later, 24,500. Another huge jump.
Yeah.
So the point is that over time it's gone up.
Absolutely. But you see there was a reason for all of this. I mean, Bill Clinton had us in a booming economy there, right? And then a war got in the way.
Exactly.
Daggum, Al-Qaeda, I mean, they blew it for us.
Exactly.
But they set us up for another boom economy that came right out of it. I mean, we need to have those pullbacks.
So long term, we're advancing, right? Long term, we're improving. And even in these tough times, what did we have? We had interest rates go to 0.
Oh, you were the phenomenal buying period for housing.
So what does that do? That puts money back to the consumer's pocket. So even though the stock market wasn't performing, we were still doing things to kind of offset that. There are bumpy areas and rough patches, but my point is that over time, this being invested long term.
But a lot of people made money in the stock market up through 2008. Yes. Right? I mean, so this idea that the market was flat from 2000 to 2010 is a misnomer because it flew up.
Right.
If you got off the train at the right time.
There was a big move up to around 16,000, I believe, right before the drop. And then it came back down.
Slocum's talking about Clinton had nothing to do with the economy. Arguably, that's correct. Reagan, obviously, the tax cuts from the Reagan era spurred the growth. Very arguable. Obviously.
Yeah, and you know what? And I think some of this
Stash Invest, another good one. It's an app, same thing with, I believe, Mark Wood, you can tell me, but I think, is it mainly mutual funds? I can't remember. Can you trade individual stocks out of there? I don't know.
And now Clark Howard also says that right now we're due for a huge pullback. But again, you look 10, 20, 30 years down the road, that most of us have time for that money to sit, we're going to be higher than we are today, in my opinion.
Okay, yeah. So they'll allow you to invest in the ETFs, which is exactly what most of us need to be in, exchange-traded funds, right?
Yeah, that's a whole nother topic, but yes.
Yeah. Every time we test that water, you're either going to, I found most individual investors are either going to get really burned or really do really well. I mean, on an individual stock. I think that the ETFs are really...
Yeah, the individual stock game, unless you've got enough money to spread that out over several names, the individual stock picking is...
It's tough, and it really still should be part of your portfolio. But how much is a thing,
definitely.
And you should be able to play. Like Mark Wood's saying, Stash. He uses Stash and Robinhood, and I think that's a good thing. One of the things too is Stash. They take a certain point every time, if I'm remembering right, with Stash. They take a set amount, weekly, daily, whatever it is, and you pay a small fee. The fee's not bad on Stash. I mean, they have a management fee of maybe 1%. And I think, though, actually the first 5,000 may be free. But, I tell you, the other thing is, as we transition in this, is that I tell you what is getting more expensive that we're not. I mean, I know we've talked about this before, but health insurance is getting to be a big deal again because silently rates are creeping back up. And we're seeing it with a lot of these buyers and people that are getting new jobs and having to think about that. And it's starting to be a big deal again. Where we're seeing not only prices going up with health insurance, but out-of-pocket premiums, maximums going up, and also their deductibles going up.
Yeah, I tell you, and I had several years there, I'd say over the last 5 to 6 years, the first 4, I was with Blue Cross Blue Shield, and the premiums were going up. It seemed like every 6 months. And I think I was up to close to maybe... $900 to $1,000 a month that I was paying out of pocket for health insurance.
It's asinine.
And then I switched over to United Health on a high deductible plan. So my deductibles are higher, but my monthly premiums are down to like $400
for a family. Or less. For a family, let's be real.
Yeah. So doing the math, even paying my deductible was still...
That's incredible. At least it's true.
$2,000 less than Blue Cross, but...
Pride of Southeast Florida is here. One of the great agents from Delray Beach and Palm Beach. I mean, geez Louise, does it get any better?
Down in Palm Beach.
Yeah. She's probably on her yacht, selling real estate from the yacht.
Just making phone calls.
Which house? Yeah.
Down into the Wi-Fi, sending contracts out, getting a DocuSign.
That's right. That's the beauty of DocuSign. You can do it from your yacht.
That's right. That is right.
You can thank John Roberts for that. Oh, yes. I agree. Thank you, John Roberts.
Beautiful.
Yeah, Slocum, by the way, everybody. Hey, Slocum, are you going to run for president again in 2020?
Bruno's back on. Thank you, buddy.
But yeah, do you remember when Slocum ran for president? It was the best PR move I'd never thought about this, but Slocum basically, everybody knows the Alabama Hammer. You see his ads and everything. But Slocum sends a PR thing out legitimately saying that he's going to run for president. He's going to ask Trump to be his vice presidential candidate. Well, every newspaper in the entire state picked it up. Big Craig instant advertising.
Free advertising.
Yeah. And,
I'm going to try that.
Yeah.
I'll try that next time.
You should. Yeah. I mean, it really, Slocum, I'm not going to say he was brilliant because that would go to his head. You don't think his head's big, do you?
No.
Because he's hunting for the big buck?
Yeah, he's shooting the big bucks. Well, man, moving on. We got another Clark Howard topic, on that same podcast. Let's okay, so talking about credit cards, and the best number of cards to have is 2 to 4 major credit cards, like a MasterCard, Visa, American
You got to have
Express.
at least 2.
At least 2.
At least 2.
At least 2, maximum of 4, but from different issuing banks, okay? Each one from a different bank.
Major bank.
Chase,
Sure.
Citi, Capital One. Those are examples.
Big monster mega banks, essentially.
And then what do you have them for? What are you doing? Rewards? Are you getting miles?
I do.
Are you getting, what's in your wallet?
What's in your wallet?
Right?
A lot of folks would like that woman. What's her name? They would like her in their wallet.
Garner?
Jennifer Garner.
Yeah, and she was a superhero.
I forget. But yeah.
Yeah. But anyway.
Then her dad was in one of them.
Yes, yeah. So the rewards. So what cards do you have? So you should know what cards you have and why you have them.
And don't carry a balance.
Yeah, don't carry a balance.
Because one thing that he talked about, and always talks about, is your debit card. Your Visa debit card does not have the same protections. Very important that the Visa debit card does not have the same consumer protections that the credit card does. Just because it has a Visa logo does not mean.
Yeah, and I just listened to something today about Debex or there's 2 new credit card / companies. They run it like a debit card, but it's got the protections of a credit card. So I didn't know that your debit card has pretty much no protections. A credit card, you can actually go back and file fraudulent charges and recover the money, right?
Oh,
That's
absolutely.
what you're talking about,
yeah,
right?
absolutely.
Yeah, those protections.
There's no reason that anybody should be using a debit card for purchases. There's just none. Because you should be having, for a good financial plan, 2, as he says, 2 to 4. Ideal is 3. Credit cards, because it's helping you with your debt utilization score. That's why you want. It's one of the reasons we want 2, right? Because we want to get some more credit out there for. Let's roll back to mortgages. Y'all are checking. One of the biggest factors is the score, and one of the biggest factors in the score is the debt utilization.
So on these debit cards, is it? And I know because if somebody gets your number, they are pulling money straight out of your checking account.
Absolutely,
and it's gone, and the bank doesn't go back and get that money, right?
Well, they can. The bank has their own policies.
So the credit
you're
card,
not protected by Visa.
So the credit card purchase really technically is just sitting there on paper. You haven't paid for it, and Visa or whoever will go back and.
I think it's important, David, for us to talk about real quick about what Visa and MasterCard are. What are they? They're payment processing companies. They're not a bank that holds money. They actually are the facilitator. They're the middleman that goes, here's $1, I'll give this $1 over here, but while you do that, I'm going to rip a little bit of that $1 off, usually 3%. I'm going to rip 3 cents off every $1. And so people go, how can, let's say I pay my bill every month, but I charge a ton on there. Why people always, I've been asked, why would they like me then? Because I pay it off every month. Well, it's because you're making a slew of 3-cent transactions. And that's where they're making their money.
And they're not charging you that 3 cents. They're charging the retailers.
That's really where they make their money.
Yeah, that's really where they make a ton of money off people that carry balances. But think about it. People that carry balances can't continue to charge, right? Because if you max out your credit cards, then what are you going to do? You can't use it anymore except pay interest. Now, they are making 16 to 18 to 25% on default rates, 28%.
And the interest rates are higher than they've been ever.
They're going to make a killing there.
Well, one thing to remember, too, I think it's very interesting, too. People say, why can Chase, for instance, offer a round-trip ticket anywhere in the world for you to sign up for this card that costs $99? The reason is the average cost to the credit card companies to procure a customer for themselves, somebody to apply for the card and use it, is about $400. $400 it costs them to get one customer. So they're willing to take that risk because they want all that money down the line. And one of the things is too, I think some of your best protections are paid credit cards. Ones where people go, I can't have a $99 credit card. Well, some of your best protection, annual fees.
Yeah.
Because, one of the best out there is the Chase Sapphire Preferred. If anybody doesn't have it, you need to look at it because one of the best things it does, for instance, is it's price protection on purchases, those type of things. But car rental. If you go rent a car, Chase Sapphire Preferred is going to be primary. Your own car insurance won't even have to get involved. They're going to provide coverage. And so you have trip insurance.
That stuff is huge.
Trip insurance. You go on a cruise. When I went on this last cruise, I didn't need to buy trip insurance other than health type coverage because that was automatically covered by my credit card that I was paid $99 a year for, but it becomes a good deal, especially if you take a couple trips.
Yeah, you got to get that information and look into the details of that. And that's some stuff that people take for granted. You know, I'll admit I didn't even know that, that you could get into these debit credit / companies that run, I've never even heard of them, that they kind of run like a debit card but have the protections of a credit card.
Yeah, it's unique, but those people are filling voids because, I think it's so important. See, here's the problem, and you will never hear Clark Howard, for instance, really mention Dave Ramsey by name, but he does say, I disagree 100% with Dave Ramsey relative to the debit card. He goes, it is a terrible card, and he bets that I think that Dave Ramsey does not use his debit card everywhere because it's unsafe.
Yeah, and this stuff is part of financial literacy. It probably sounds hard. People don't want credit cards because it's tough to manage, right? And they get
absolutely,
and they don't responsibly use them. But some of that hard stuff is important to learn and figure out and do.
Absolutely. We talked about the effect on the credit score, but remember, we talked about it a few weeks ago about even insurance now is rated. You're rated based on your credit score. So the idea, one of the hardest things we find, and you probably do as well, we get a lot of these young girls coming out of college. I'll say a young girl's 21, 22, coming out of college. Dad's paid for all of their stuff. They've always been on dad's accounts. They have no credit. One of the best gifts they could have given that child is the ability to start at about 18 getting some credit.
Yeah.
So we don't have to go through these things because women are typically more mature and more willing to get their own credit.
Yeah. Well, I think the biggest thing is that people are just so anti-credit cards because there's this stigma about them because they've been used irresponsibly for so long.
Absolutely.
And it's not the credit card doing anything to you. It's how you use it. Right?
Absolutely.
It's just like gun control. The gun didn't kill anybody. The person operating it did, right?
Absolutely.
So I think it's just a change in the message and the tone and an understanding of how to be more responsible with that and use it to your benefit.
Absolutely. So anyway, it's another thing too. It's funny. All this comes back around to real estate, to whether it be the mortgage side, and for us, it's getting a consumer into that new house. All the stuff we talked about affects their ability to get not just your credit score does affect your ability to get a good rate, right? So
and good financing terms. Just the difference between a 3% down conventional loan and a 3.5% FHA loan. You're going to spend less money on the 3% conventional. Not just the down payment. I'm talking about over time, the mortgage insurance and things like that. So, that credit score and your credit rating has a big effect on all of your finances.
Absolutely. Hey, Ann, I hope you're doing well.
Well, man, I know that's about all we had.
Yeah.
This weekend we've got the Mount Laurel Spring Festival.
Always a good time. Good one. If you're new to town, hit that up.
It's in Mount Laurel from 10 a.m. to 3 p.m. If you need more information on that, go to mountlaurel.com. Another thing I saw on Facebook today was the Woodlawn Street Market.
Never been there.
Never been there, but that's in downtown Woodlawn. Wanted to bring that up from 10 to 4. So
we're back in that time where we're having all these festivals and good times. And
man,
by the way, Pepper Place will be back, right?
Pepper Place will be wide open. The weather has been great this week and a little cool yesterday. And
it was. And it was a little cool this morning too.
Yeah, but really nice. Starting to warm up. The Masters is going to be going on.
It'll be popping,
the rest of this weekend.
Yep.
So a lot of cool things going on.
And you're going to see Chris Rock, not Chris Rock.
No, Kevin Hart.
Kevin Hart. Same thing.
Kevin Hart.
They're about the same, right? Kind of. I don't know. I love Chris Rock. Yeah, both comedians.
Kevin Hart is really
They're
short.
close.
I don't know how tall.
I think Chris is real short.
But
I don't know why we're talking about their size, but yeah, very funny.
Well, Kevin Hart always makes.
I love Chris Tucker too. But
I think all Kevin's comedy.
You taking the kids to see him?
No, I don't think that's going to be appropriate. But we'll see.
Well, your oldest daughter could go.
Yeah.
All right, guys, we will see you next week, same time, same place, and we'll have the happy hour.
Have a wonderful weekend.
All right. Tiger wins.
See you guys.
Tiger Woods wins. I'm just throwing it out there.
That's a good prediction.
I mean,
Sergio is not.
Sergio is not. He 10 cupped it today. It was like in 10 cup.
4 in the water.
Yeah, on purpose. All right, guys. We'll see you soon.
See ya.
Bye-bye.